Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So yesterday we were actually concerned about the performance on top, and we talked about the situation where gold market just can't get started any bearish performance that actually should happen somewhere in the current moment. And just we have discussed this moment, you can see what has happened later. Market turns to the profit taking and collapse has happened. So at this point, could we treat it as a kind of the double repo? I think that's no real problems with that. So since we have the second close below the 3x3, yes, here's we have not big difference among the top. Drop was relatively fast, so obviously point on some profit taking. Moving average envelops performance really great, and currently it's additional advantage of the current situation that it is really easy to control. Because you know that the invalidation point of all this setup will be just above the top, and if we will get more or less significant pullback here to predefined resistance levels, it might be interesting to consider taking the short position because the risk will be very small. Potentially, the target of the double repo might be somewhere around 2770, 50% support of the whole upper direction. And this is nothing really curious with this possible retracement, because those of you who read our long-term reports, weekly analysis, monthly analysis, you know that 2860, 2950 is very strong long-term resistance area, where market has completed all-time OP target. And naturally, a reaction should happen to such a strong levels. Of course, 2770 is not the subject of the current week. Here we have actually everybody around 2850. And hardly will get really big breakout below this area. And since we have just 2 sessions until the end of the week, we probably could not get even faster acceleration down. But this recent performance tells that currently it probably makes sense to wait with any long positions. So it makes sense to not hurry up with the considering new longs, new buying on the gold, and wait what will happen. If you do not want to sell and deal with a double repo pattern, that's understandable, because we have long-term bullish context. Fundamentally, gold also look bullish, and not everybody would like to try to catch some short-term setup, take big risk on that. It's better to sit in the hands and wait when the pullback will happen, then consider possible taking the long position. This is normal view, especially if you trade on the long-term time frames such as a weekly. But if you're trading on the daily intraday charts, you have bearish context, first because of the double repo, second because just of the MACD, which points on the downward direction. So at this point, we don't have any even theoretical background, at least by the Jordan-Napoli rules, to consider any longs position so far. On lower time frames, take a look on the full time frame chart. The wedge pattern that now stands here is on the way to break out, and for bearish position, if you would like to take it, you could watch for a couple of moments. For example, divergence is still in place, and it suggests deeper drop somewhere below these lows. So for position taking, it makes sense to consider regardless triple to sell here, because gold market likes to form triple to sells right on the top in possible reversal. 2930 is also important level because, well, actually it's not a strict level, but by the Jordan-Napoli framework, it points this level as a vital point for a double repo. So on a daily chart, market should not close above it to keep double repo valid. But my practical experience tells that this level is more theoretical. So I saw many times when the market was showing the pullback here, closing above the 618, but the double repo works later. So it might happen. So from that standpoint of view, it would be better to consider how price will perform around it if we will get the same dynamic as on the Bitcoin market that we discussed on Monday. When the moving average envelops the price action stands slow and tight, this will be a good sign in favor of double repo. So for now, I would follow this indicator rather than just watching for the 618, but it also important level, so you could also keep an eye on. So on hourly chart, if you're planning to take the short position, that's the particular pattern that you could consider. First of all, here we have minor grabber. Theoretically, it could trigger some upper direction above the stop. It's not necessary that that we should get AB equals CD for a deep retracement. Gartner's triple 2 will be formed even if market will just slightly move above the stop. So grabber will be completed, we'll get the Gartner's triple to sell, and that might be considered for position taking. Downside target, which is actually, we thought it will be some consolidation, but collapse still has happened based on the profit taken on the market, so another external impact. So it kind of the double top pattern, but it's already mostly done, because if you calculate the classical target of this pattern, you can see here's very small difference, and mostly we could say that this has been achieved. So as a bottom line, what we could say currently on the gold, despite that really very strong fundamental background in the gold and our long-term view, which is a bullish, in the short term, we think that it's not yet time to consider new longs position, based on all the stuff that we have on the daily. So if you would like to buy, especially if you trade on the weekly and daily chart, or even on the lower time frames, we think that currently it's better to wait. Those who still would like to take the short positions could follow the patterns and scenarios that we have just described. This is a weekly daily double repo sell, and here is also possible some chances to get Gartner's triple to sell pattern that also might be used to minimize the risk and contract the possible loss if still market will turn up and will destroy the bearish scenario. Risks of the bearish scenarios are really high, just because overall momentum stands not in favor of sharp reversal. But actually currently, based on the situation that we have, we do not have a bullish scenarios. So this is this is one of the questions that you will have to decide. Technically, we have reasons to go short, but whether it will be comfortable to you to do this from the psychological point of view, are you ready for possible taking the short position right at this background? So from the technical and theoretical point of view, there is no barriers. The barriers might be just in the head, in mind, when you will have to go against the big tendency that you see on the charts. But at the same time, I could say that this setup brings not too much risk, especially if we will be likely to get the position on some pullback and getting some Gartner's triple to sell pattern.